All right, let's get to this. You saw U.S. stocks turning red after Trump started posting about China. Let's go to Youngyu Ma, Chief Investment Strategist at PNC Asset Management, to talk some more about this. Thanks for joining us today.
Thanks, Marilla. Great to be here.
You saw Trump posting just before 11 a.m. Eastern time, and then everything started taking a dip down, a big U-turn there. Are we headed, do you think, for another round of tariff threats and confusion?
Well, that's a great question. We'll see how it develops. Certainly today, I saw the markets take a very steep decline before I actually saw the post. So clearly there was something driving that. And this news is really carving out the negotiating positions both for the U.S. and China. China has been taking somewhat of an aggressive stance in advance of what were expected to be talks coming up, direct talks between President Trump and President Xi on October 31st. Now that's called into question, but the door is still open. I think that's important to remember. I still think there's a chance, and probably 50-50 chance, that President Trump and President Xi will actually meet on October 31st and make some progress, not have a grand deal, but at least make some progress perhaps on some key issues and lay out more of the general structure that the negotiations could take going forward. So today's a setback, but I don't think today is deterministic of the path that the U.S. and China are ultimately going to take with negotiations.
Why do you remain optimistic, given the comments made today by the American president?
Well, I think it's in both the U.S. and China's interest to strike some sort of a deal that reaches a status quo that both countries are satisfied with. In the past, President Trump has made numerous comments that he expects a deal with China, that he considers President Xi a friend, and that there's a path toward a deal. I still think that's the case. It's just that both sides are taking very aggressive stances ahead of negotiations, which isn't totally surprising. There is certainly tension in the relationship, and both sides, to the extent there's a path toward a deal, both sides want that path to veer in their direction more than the other direction. So I think that's where we are right now. We're in a tense moment. The tensions have resumed, but I don't think the door is shut. I think both sides have very much in their own interest to strike some sort of deal.
Okay, does this reignite inflation concerns for you, or is it too early for that?
Well, that's going to be a concern of the marketplace. I think it's a little bit too early to be overly concerned about inflationary concerns. Inflation coming from China and imported goods certainly can have a one-time effect. We're not seeing the type of inflation dynamics here in the U.S., which would point to aggressive inflation. So even if there were additional tariffs on Chinese goods, remember there are already tariffs on Chinese goods, which are quite significant. Even if that were raised, I don't think that would cause a specter of inflation to spiral upward. It could cause additional short-term or temporary spikes in prices that stayed in the system, but I don't think that's going to cause a spiral upward in inflation. So it's not great if it happens, but it's also not changing the overall trajectory, which I think is relatively modest inflation going forward.
Okay, the dispute between China and the U.S., of course, is over critical minerals, which are key to the movement and the forward movement of technology. Where are you landing on the idea of an AI bubble?
We don't think there's an AI bubble. We think there's so much growth that's taking place, so much innovation. The exponential growth is not the point on the curve where the bubble actually starts to form in a meaningful way. You start to have more bubble concerns when there's a leveling off of growth or a leveling off of use cases. Right now, we're just seeing tremendous uptake and interest and proliferation at the corporate level in terms of the usage of AI, that we don't think the notion of a bubble is one that should be focused on here. Right now, we're seeing benefits, we're seeing acceleration, we're seeing a lot of investment, but what we think is going to be a very transformative time for the U.S. economy. And I don't think that a bubble is the concern right now. Could we be wetting the needle that eventually leads to a bubble? Yes. But the idea that we're in a bubble right now, when the Fed is cutting rates, when fiscal policy is stimulative, and when we're seeing the type of innovation that takes place every single week in AI, I don't think that's a reasonable assessment of where we are here.
Okay, would you still put money into the AI leaders right now?
I think those AI leaders are in very strong positions going forward here. Now, not every investment that they're making is going to pan out. I think we have to accept that. So diversification among the AI group is important, but as a technology, as something that benefits companies, benefits individuals and society, I think it's going to be a very profound effect. And the idea that there aren't going to be gains to be made from here and that we've seen the peak, to me, is probably very, very early to be making those type of statements.
Okay, and you like Chinese technology specifically. Tell me why.
Well, certainly today it's taking it on the chin after those announcements, but China is very much in a strong position as relates to both AI and technological developments overall. So they're leading in many areas of technology, and in areas where the U.S. leads, China is very much playing a close catch-up game. So, if you want to be exposed to AI globally, you almost have to be exposed to Chinese technology and Chinese AI because they are so strong in areas of advanced manufacturing and in areas where AI is actually implemented, whether it's in automation or medicine, other areas of the economy. China is very strong in the implementation, the power generation that fuels AI, and really getting it proliferated into society. So we think that's part of the global trade. This is a global phenomenon, and you want to be globally exposed.
Young Ma, I've got to leave it there. So I'm out of time with you. You are the Chief Investment Strategist, PNC Asset Management. We thank you very much for your time.